Hi and Assalamualaikum. Today I'm gonna present about introduction. First of all, my name is ASYIQIN binti Azizah. What is Companies Act 2016? The Companies Act 2016 repealed the Companies Act 1965 and changed the landscape of company law in Malaysia. The Companies Act 2016 reformed almost all aspects of company law in Malaysia. Okay, that's mean before Companies Act 2016, Malaysia already have Companies Act 1965. But in 2016, Malaysia changed to Companies Act 2016. They also changed the landscape of company law in Malaysia.
Warahmatullahi wabarakatuh. So today I will explain about classification of companies based on Companies Act 2016. Classification of companies based on Companies Act 2016 are divided into three. First, there are company limited by shares. Before I continue my explanation, I will introduce myself. My name is NURUL binti Yusuf Hanif and I from DIA 3F. So let's continue. Company limited by share are the company divided to a public and private company. As we know, public company they have word berhad at the end of their names, and same to private company also. They have sendirian berhad words at the end of their company. Next, we go to the next point is a company that is limited by shares. It is referred to a company that has the liability of the members limited by such an amount that it's paid on their respectively held shares. The company can enact this liability while the company is in existence or as it is ending. For the more explanation about this point, I will give example like if a shareholder subscribe for RM 100,000 ringgit share capital and had only paid RM 80,000 ringgit, his liability is limited to RM 20,000 ringgit unpaid on his shares. If the shareholders fully paid the shares, so there are no further liability to the company. So we go to the next point is the shareholder are not liable for the company debt. That means is if the company are not fully paid the debt, the personal asset from shareholders such as car, house, or another thing for asset, it cannot be taken by the company to settle its debt. The company must settle the debt by their own. To the another classification of company, there is a company limited by guarantee. Company limited by guarantee has to be a public company, and the liability of the member is limited to the amount pledged by the members to the contribute if the company is dissolved. To make it more clearly, generally, company limited by guarantee do not have share capital or shareholders, but they do have members acting as the guarantors. The guarantor will contribute a sum of money, which is usually very small if the company is going to wound up. And next point is company limited by guarantee required to apply its profit or other income to promote its object and cannot pay dividend to its members. So that means like if the company get profits from their promote, they have to use the profit to promote the company product. So we go to next is company are not allowed to hold lands unless a license has to be obtained from the minister. If the company goes bankrupt, the company asset will be transferred to another body with a similar object. Like example, if the company for charity, if they are wound up, so they will transfer the asset to another charity. For a license to have, this company will have the berhad at the end of their name and have to apply the license from the minister. Uh, so we go next slide. That is company. This is a company. Company can only be formed for the purpose of providing, like recreating or amusement, promoting commerce and industry, promoting art, science, religion, charity or pension, promotion any other object useful to the community. Like go to the new topic, which is type of companies in Malaysia. First, public limited company. Okay, public limited company is defined as a company which offers its shares to the public. Public limited company is a company whose ownership is organized via shares of stock which are intend to be freely traded on a stock exchange or in over-the-counter markets. Public company required to have word berhad as a part of and at the end of its name. There is no limit to the number of shareholders to possessed by such a company. That means there are no limit on the maximum number of shareholders. They must be at least 18 years old or older to hold such a position in public limited company. This company can offer its share and debentures to the public and seek a listing on a stock exchange. A public company can be listed on a stock exchange, which facilitates the trade of shares, or not a listed public company. In some jurisdictions, public company over a certain size must be listed on an exchange. Information under the Malaysian Company Limited by guarantee has to be called as a public company. And I give you example of a company limited by guarantee in Malaysia, such as Kolej University Islam Melaka and Media Prima. So we go to the next types, which is exempted private company. Exempted private company has not more than 20 members and whose shares are not held directly or indirectly by any corporation. An exempted private company needs not file its annual account with the Company Commission of Malaysia for the information of the public. So, the exempted private company do not need annual accounts report for the information for the Companies Commission of Malaysia for the information of the public. So next slide is, however, an exempted private company needs to file with Companies Commission of Malaysia a certificate that is signed by the director of the company, the security and the auditor company, stating that the company has kept proper accounting record and others booked during the financial year. The company is able to meet its liabilities as and when they fall due. So if we want to open the exempted private company, we have to get a certificate. Is signed by the director of the company, the security and the auditing company, and get a certificate from the Companies Commission of Malaysia. So we go to the next types. It's a foreigner company. As we know, foreigner company is a company, corporation, society, association, or other body incorporated outside Malaysia. And unincorporated society, association, or other body that can sue or be sued or hold property under the law of its place of origin and does not have its head office of principal place business in Malaysia. In this main, foreigner company, corporation, or other body incorporate outside Malaysia. They open the company but outside Malaysia. So this is a few company that from outside but open at Malaysia, such as IZZAH, Panasonic, and Honda. So we go next to the slide. Next slide, government linked companies. Government linked companies, as you know, are corporate entities in which the government owns some or all of the share capital, and this company could be either which is a private or public. The government linked companies would be the boost for the country's economic development. For more understanding, the government linked companies could be the boost is for the country's economic development. It's mean if the company is open and then the government join the company for increase the economy level in country. And we go to the next slide. That is example of government linked companies. So there are so many government linked company in Malaysia, with like agents for country. For example, such as a Pos Laju, Maybank, and Petronas. Nadia. Okay, next we go to the register requirement based on Companies Commission of Malaysia. Okay, what we need in the requirements, we should create an optional name 3 times to apply as a company name in Company Commission Malaysia. Oh, sorry. So let's go back. Okay. It's mean before we register at Company Commission Malaysia, we need to create an optional 3 name for the company. Okay. Next point, it has at least 1 director, 1 shareholder, 1 company, and witness either among Malaysia citizen or permanent resident or foreigner national. Before we register the company, we should have a complete organization that can run out the company. Next is every company established in Malaysia must have its registered office address in Malaysia. Before we go to the Company Commission Malaysia, we need address for the business place. condition to become a director are age 18 years and above. So the minor is can't to be the director because in the CCM the requirement need a age 18 years and above to become a director. The company statutory book are required to be in the company register office for the purpose of updating from time to time in accordance with the provision of the Companies Act 2016. So, what is used for uh, company statutory books function to update from time to time the company according with the provision of the Companies Act 2016. So that's all from me. Thank you.
Hi, my name is NAJIBAH, and for the next slide, I will present about financial reporting requirement based on Companies Act 2016 and the Financial Reporting Act 1997. Firstly is accounting and other records. Based on the Companies Act 2016 states that every company and its director and manager shall cause to be kept such accounting and other records. And next, all accounting and other transactions should be recorded within 60 days and retain all records for 7 years. Secondly is financial statement. These financial statements are to be prepared at an interval of not more than 15 months. Second, these financial statements are to be duly audited before their distribution to the meeting or before the AGM, which is annual general meeting. And this financial statement should give a true and fair value of the financial position of the company at the end of the financial year and financial performance of the company for the financial year. And the last is director report. Based on the section 252 of the Companies Act 2016 requires the director's report to be attached to the financial statement of the company. And the next is the director reports may also contain business review.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is NURDAYANA Hisham, and today I will be presenting about financial accounting 4, and I will be focusing on the topic of annual report. So basically, before we go through the element of annual report, I want you to know the meaning of annual report. So what is annual report? Annual report is a compilation of report and financial statement that is required by law, and it will be presenting to the shareholder in the annual general meeting of each of the company. Okay, so main document of annual report maybe consists of the financial document and also the general information of the company. Okay, and this annual report may be used for internal and also external regarding the past and the present achievement and also the future plans of the company. Okay, so we move on to the element of annual report. So we have 3 elements of annual report. There are many elements, but I took these 3, which are the chairman's statement first, second is financial statement, and the third one is auditor's report. Okay, in chairman's statement, I will make it easier here. Chairman's statement is something like the chairman's opinion and also the chairman's comment about the future plan of the company, also saying about the positive features of the company operation, and also about the development of the company. In chairman statement, it covers many area, including the dividend, financial position, major development, economic performance, future prospect, and so on. Sorry. Okay. The next one is financial statement. Financial statement. Okay, as you can see here, there's three, right? Three section in the financial statement, which is director's report, auditor's report, and also the financial statement itself. So basically, for this one, financial statement, okay, for this one, it consists of the statement of profit or loss, the cash flow, statement of cash flow, statement of financial position, and also financial result of the company. So what is the uses of financial statement? So the uses is to determine the whether the company is capable to pay their debt or not. Okay, and also to determine the ability of the business to generate cash source, and also use of their uses of cash. Okay, so director's report. Director's report is a report that will help the shareholder to make a decision. Either they need to continue their shares in the company or not. Okay, basically it provides the company's condition, whether it is whether it is healthy or not. It is basically on financial lah. It's basically on financial. Okay, so the second one, from director's report, it will help the shareholder to know about the capability of the company, whether it is can grow bigger, better, or not. And also it can help the shareholder to know the overall performance of the company. Okay, so that's why I said before that the director's report may help the shareholder to make a better decision whether they need to continue their shares in the company or not. Okay, for auditor's report, this one, we will go to this one, okay, because it is the same. Okay, so what is auditor's report? Auditor's report, sorry. As you can see here, I said that auditor's report is appointed to examine and report on the info contained in financial statements circulated to members. Okay, to make it easier, the auditor's report is an evaluation whether the financial statement prepared by the accountants of the company is valid and reliable or not. Okay, it's about the validity and the reliability of the financial statement that has been prepared. Okay, this is important because it has been mentioned in Section 261 Companies Act 2016. Okay, so that's all from me about the element of annual report. Thank you.
So the next part is legal requirements for the Bursa Malaysia Securities Berhad. And the first requirement is listed companies have to make additional disclosures regarding the performance of the company. And the next is they are required to make a preliminary statement of results within 6 months following the end of the financial year. And the last requirement is the listed companies are to issue half-yearly reports regarding their performance within the 3 months following the end of the half year.
Next, I'm gonna talk about advantage of change from partnership to company business form. Okay. First advantage is efficient management. In company form of organization, ownership is separate from management. It enables the company to appoint an expert and qualified person for managing various business functions. The availability of large-scale resources enables the company to attract talented person by offering them high salary and better career opportunities. The efficient management will help the company to expand and diversify its activities. Okay, next is limited liability. The liability of members in a company form of organization is limited to the nominal value of the share they have acquired. If a person has purchased a share of 1,000 ringgit, his liability is limited to 1,000 ringgit only. If the share is partly paid, then he can be required to pay only the unpaid value of the share. In no case, the total payment will exceed 1,000 ringgit. The limited liability encourage many persons to invest in share of joint stock companies because many persons will be reluctant or afraid to invest in this enterprise where liability is unlimited. Okay, next advantages is accumulation of large resources. The main drawback of the sole trade and partnership concern has been the scarcity of resources. The resources of a sole trader and of partners being limited, this enterprise have always suffered for want of funds. A company can collect large sum of money from large number of shareholders. There is no limit on the number of shareholders in a public company. If need for more fund arises, the number of shareholders can be increased. Joint stock companies are suitable for this business where large resources are required. Next, disadvantages of change from partnership to company business form. Okay. First, disadvantages is difficulty of formation. Promotion of a company is not an easy task. A number of stages are involved in company promotion. The suitability of a particular type of business is to be decided first. A number of persons should be ready to associate for getting a company incorporated. A lot of legal formalities are required to be performed at the time of registration. The shares will have to be sold during the particular time. Promotion of a company is both expensive and risky. Okay, next the advantages is evils of factory system. The company form of organization leads to large scale production. The evils of factory system like insanitation, air pollution, congestion of cities are attributed to joint stock companies. Joint stock companies facilitate formation of business combinations, which ultimately leads to the monopolistic control and exploitation of consumers.
Okay, so welcome back with me. Okay, this part I will be touching about the element disclosure in financial statement. Okay, and we want to differentiate about the financial statement for the company and also the sole trader or partnership. Okay. Okay, so let's move on with the first part, which is capital. Okay, capital. Capital for the company, it is more to share capital, and there is shareholder and share capital. This is work when the company issuing their shares to the public, and the public will buy the shares and the capital of the company will be increased. Okay, so it has ordinary and also the preference, but I will not touching on that part today because it is on chapter 2, so no need. Okay, so capital for the sole trader or partnership is sorry, honest equity, or we can call it as capital by owner. And for partnership, okay, for example, you have 3 partners for your partnership. Okay, so sum up the capital from the 3 partners, and it will be the capital for your partnership. Okay. So next element is trade receivable and also account receivable. Okay, both of them is same. Both of them is same, but the terms here, trade and also account here, that is the only different. Okay. Okay, as we know, account receivable is the amount owing to a company when when others buy goods and service. Okay, amount owing to a company for goods and service it has sold. Okay, I know we all know about this. Okay, next is trade payables and also account payable. This is the same. Okay, just like the trade receivable and account receivable, both are same. The only difference is in the term here, trade and also account. Okay, account payables is the total amount owing by a company for goods and service it has bought. Okay, next is net profit. Okay, I will touch about net profit in the sole trader or partnership first. Okay, so for sole trader, we know that we can determine the net profit in the SOPOL when the gross profit is minus with the expenses, and then we will get the net profit. Okay, just like that. And also for the partnership, where's the arrow? Oh, here. Okay, so for partnership, the net profit has been added to the capital and the current accounts for each partners. Okay, but here, net profit for company, we call it as return earning. So what is return earning? Actually, return earning is the profit of company has earned to date and less any dividends or other distribution paid to investors. Why we said like that? Because the capital we have here in the company is including the share capital. I mean the share that we issued to the public, and the public buy our shares, and the company need to pay the dividend to the shareholder, okay, or the investor. Okay, so that's why the net profit is called as return earning. Okay, next element is wait, yeah, where's the arrow? Okay, next is non-current liability. So non-current liability for sole trader or partnership is just the same as we know. It is including the long-term loan. Okay, but non-current liability for the company, we call it as debenture. So what is debenture actually? So debenture is a medium to long term that that used by a large company to borrow money. And debenture basically there has the fixed date. It it is repayable. I mean, honey, this one. Ya Allah, where's the arrow? I okay, here is the arrow. I lost the arrow so many times. Okay. On the debenture, there has the fixed date to repayable, and also the debenture, they has a lower interest rate if we if uh, it is secured, and also it has a lower interest rate, and it has also the fixed date for repayable. And for debenture, it is give some advantages to the investor, which is they contain less risk if we compare to the unsecured loan. Okay, so that's all the differentiation about the financial statement in the company, and also the partnership or sole trader. The It is almost the same, but it is like different in the terms, in the capital, in the net profit, and also in the non-current liability. It is uh slightly different. This is not so big. Okay, that's all from me. Thank you.
Okay, conclusion from this topic is this introductory chapter gives an overview of the legal aspect of company formation and the financial reporting responsibility of companies. Okay, that's all from all of us. That's all. Thank you.